Hi there, it's Bill with Smart Trades. It's Friday, October 21st, around 11:45 a.m. Pacific Time. And as always, if you'd like more frequent updates, trading tutorials, uh, intraday discussions of the market, please visit smarttrades.com. I try to update on a daily basis via Twitter, as well as several times a week via my newsletters. At any rate, here's my long-standing S&P count. This is my favorite count. It's been so for some time. There's some variations that have evolved over time, but basically I've been talking about the market retesting the 1250, 1260 area. 1240 is the lower end of that range. 1285 the upper end of the target range for a variety of reasons, which I'll get into. And we indeed have tagged the 1239 level just a point shy of that 1240 target. I'm not favoring that a top is in quite yet, but it is possible, certainly. Again, we're within 1 point of the lower end of the target range. One thing that makes me a little uncomfortable about this count is a lot of folks jumping on the bandwagon in terms of looking for resistance at this area. A lot of folks that were very bearish down here are suddenly, calling for the top up here. So just a little bit of a concern. Robert Prechter years ago mentioned he doesn't feel comfortable when he has a lot of company in terms of his analysis, and I would tend to agree with that. The bottom line is everybody is usually not right at the same time. Anyway, here are some more details on the count. As you can see, we've had a rising breadth ratios, pretty strong really. This is earlier today. We were at 2,500. We're not far from there now, about 2462 as we speak here. And we are retesting again. These are the areas where the market broke down from when S&P leaked the information about the U.S. downgrade, and we are indeed retesting the lower end of that range right now. Again, the high today, 1239.03. That said, this count is possibly terminating. I would like to see bearish breadth divergences if that is the case. One caution here: if we rally beyond about 1265, 1270, it depends how you count the bottom of wave 5. 5 will be longer than 3, and 3 is shorter than 1. That is an Elliott wave unbreakable rule. 3 cannot be the shortest wave in an impulse structure. So again, a rally through 1270, it doesn't necessarily invalidate the entire count, but it invalidates the short-term labeling here off of the October low. So we'd have to take a different look at that. And just a quick note, the area around 1285, 1290, 1.62 times A, again, that's too high for this count, but it's still an area worth watching. There's different ways we can evolve to get there. And one of them is that actually the rally up is in ABC. This can fit either the super bearish or the moderately bearish count. And in that case, 62% of A is going to come in up around the 1285 area basis. The futures show a very nice contracting triangle here, and that's consistent with the B wave. It could also be a fourth wave. The problem with that is there's no real clear wave 1 to match up with this as a wave 4. So here's an alternate scenario to look for. Also, that 1285, 1290 area has some natural resistance as well. Here we are in the cash again. Count a little different. The triangle not so clear, but again, that area perhaps around a little higher in the cash, up around 1290, 1285. If indeed, first we've got to get through that 1270 and break the 5-wave structure count. But if we do, that would probably get a lot of folks worried about their bearish counts up around that 1290 area basis cash. Here is the Qs, and or are the Qs, I should say. And I think we have a pretty clear count that best counts as an ABC down, A, B, C. little more than 1.62 times A on the bottom of C, and from there what I think is another ABC back up of slightly smaller degree. Here's a longer term look. This is the Nasdaq 100 cash, and here again is that 1.62 times A. That would target the area up just above 1700. That is natural support and possibly even a fourth wave, depending on how you count the rally from the late 2008 low in the Nasdaq. The Nasdaq bottomed ahead of the broader market, as you're probably aware. 1, 2, 3, 4, and then a fifth wave up. If that is the case, the bottom of the previous fourth wave comes in around 1700. And again, that's near 1.62 times A. On a shorter term basis, again, here's that 1.62 times A on our little ABC off the high. This could also be labeled as a five-wave structure complete. So again, be alert here. It is not impossible, particularly in the Nasdaq, that we've already peaked. 1.62 times A again comes in on the long-term chart of the bonds. This is the TLT 20-year Treasury bond fund, and you will note we've got a giant double top going back to the 2008 peak in the bonds. The bond market tends to act as a bit of a leading indicator for stocks, so I do have to wonder here if, given this nice ABC structure, the nice 1.62 times A and this double top, if indeed, this is, foreshadowing a turn in the market as a whole. Dow Jones Shanghai, again, folks are calling this an impulse down. I just don't see it. Looks like a flat. A little more of a close-up there. Again, clear ABC structures. It's possible it's going to evolve into something else, but you can see the ABC's up, the ABC's down. It looks corrective. Apple, a different story. This is a chart that I posted. Actually, I had posted another chart earlier to my clients looking for a peak around 430. We actually fell shy of there. That would have been a perfect a 1 equals 5 scenario. We actually topped, I believe, in the 426, 427 area. And from there, we've declined. This is just a 5-minute chart. You can see a clear impulse wave down. At that point, I was talking about a rally back to the 421, 422 area. We indeed got it. And from there, or actually a little higher, we actually wound up having a slightly more complex wave 2 than I had originally anticipated. But indeed, that did turn out to be the top. The move down is a little bit uglier. Notice the ADX peaks here in Apple coinciding with our top. I forgot to mention this. Looking at the Dow Jones Shanghai, you can also see the ADX very nicely pinpointing major turns in the market. Generally, I don't like to use momentum oscillators and such, but the ADX is a little different. And note here on gold, it actually caught the top there as well with its extreme reading. Uncomfortable with my count in gold. Gold, the first decline A, B, and then what is possibly a 5-wave structure down, no longer makes sense to me on a proportional level. The C wave is too long in terms of time relative to A, so it's no longer proportional. Indeed, this may still be a 5-wave structure evolving to the downside, but I don't think it relates to this as an ABC. So time will tell. We'll have to work that out. Silver, on the other hand, thanks to Max for noting this a few weeks back. I'd also mentioned this AB pattern back in June or July or so. At any rate, it's evolved very nicely into an ABC at previous support. Note again the ADX, nice peak here on the weekly chart coinciding with peaks in the market itself. Crude oil. The Saudis and big oil, they want oil around $85. That's their target, where it's high enough to keep them in the money and low enough to keep solar from being extremely profitable in relation to gold. Actually, the Saudi ambassador to the U.S. Pinpointed 85 as their target price for crude. There are some a little cross currents here. For example, the Iranians want crude to be higher because their process is so inefficient. They can't make money unless it's over 90. So a little bit of a push-pull here, but I think the Saudis and the U.S. oil companies have the bigger clout, and also the pattern works out pretty nice with support right there around 75 to 80 and resistance at 90. And finally, copper. Copper evolving into a pretty nice Elliott wave pattern. We have a nice target for copper down around 36. Classic 1, 2, 3, 4 with a 1 equals 5 down around 36. It's possible this entire decline is an ABC. It could also be an impulse structure to the downside. Copper is a little bit of a concern. If you see copper collapsing, it's not a good sign for the overall world economy. And at any rate, 35, ideally perhaps more around 36 and change. Possible target for a low in the JJC Copper Index. Once again, if you'd like more frequent updates, please visit me at smarttrades.com. I do trading tutorials with intraday updates. I usually send out a newsletter 2 or 3 times a week as needed. And I'd love to see you there. Hope you're having a great week, and have a great weekend ahead. Thanks for watching. Bye-bye.